Hope you guys are having a wonderful day. Welcome to another video. This is a trade recap that we took on Monday. I didn't go live because I took a trade before 8 a.m. as well as, you know what I'm saying, he went to a loss, right? He went to a loss around 8 a.m. right before 8:30. I was like, if I'm in a trade and if I'm staying in a trade till 8:30, I will still go live. But that stopped me out, so because I could only take one trade a day, right? Today we had a short bias, which is the bias was wrong, but there's a big ass lesson out of this trade, and the lesson is OTE, right? And yeah, the bias was correct. You could see it did go down in our favor, but what what overall led me taking to a bearish bias instead of the higher time frame is I did not see the daily. I did not see this daily, fair value gap. I mean, I did not see this daily CRT getting respected. So okay, I'm just gonna go for long here without wasting time. But as you can see right now, it's definitely getting respected, and you know, we're gonna talk about that. But before we go, to why our boss was wrong, let's go based out of our boss that were bearish setup. Let me show you guys bearish setup that was on a loss. We had two bearish setup, and one of them were not supposed to be a trade. A second was supposed to be a trade, but very very viable setup. I mean, very very viable. You know what I'm saying? Trade because the lesson that I take out of this setup is insane, right? Probably wondering like every trade should be like that, right? Until you know what I'm saying, you're very very have a solid foundation, right? In this case I do not, but I just added another arsenal to my thing, which is OTE. And I'll tell you guys about what a pattern that I can't see happening. I can't see this thing happening about OTE, and this gets straight into it, right? And you can see on the higher time frame, what let me taking a bearish setup was a weekly ERO to IRL, right? Weekly CR to the downside. I thought the weekly short was looking going to be down here if we're going back up. But as you guys know, there's an ERO to IRL. Market will usually high likely to go to the high first, then go low, then go lower, right? On a daily, what do we had here? We had a daily ERO to IRL. This IRL got inverse during that Pacific time, right? Right now, it will be a whole different play here. Will I be bearish for tomorrow? No, I will not be bearish for tomorrow. Why will not be bearish for tomorrow? Because of this fair value gap got inverse. So what led me to overall taking a bearish setup was this daily ERO which is IRO. As IRO got inverse, so we're going to the low, like here's the IRO, which is the weekly CRT low. And we had a daily range here, market super low, super high, stable low. Had the premium daily range, going daily range low, which was not gonna get met at all because that daily range looked like it was bullish instead of bearish, right? But we did have that as a context here. And we had a classic vision profile 2 to the downside, Monday high of the week. So I was looking for a push down. And keep in mind, we're probably not gonna be the same bias tomorrow. Probably gonna be different bias, right? Probably gonna be bullish bias here. Looks like to be longs instead of shorts here, right? But lessons, right? Now let's go to a lower time frame. That's all we had in a higher time frame, right? Nothing else, right? In the lower time frame, we had a week of 4 hour CRT, right? So 4 CRT low, high got sip going to 4 CRT low. That's why this one want to take profit. Because we had a daily range, super low, super high, stable low, stable low, stable high, stable low, stable high. I mean, this is premium. The discount market had the premium of the daily range go daily range low, which is right about the weekly CRT low. As well, we had a New York continuation, right? If I'm bearish, I would want the lunch to make the high and not the low day. In this case, there was a New York continuation here. And market, you can see market there in New York reversal as well here. You can see 5 a.m. accumulation, 9 a.m. pushing, 1 p.m. expansion. And the bull setup that should have been our setup, but that setup did not offer us that that right number one, right? So now if we go to the lower time frame to execute a trade, I was looking to execute between 7 a.m. to 10:30 a.m. 7 a.m. hit, 7 a.m. high got purged. Why does what did the CRT got purged 3 times here? 1 time, 2 time, 3 time. Why? This first purge happened outside the time window and it was not too high. Second purge happened at the right time window, but you gotta keep in mind of price and time, right? The price aspect was nowhere near trying to go down here, right? The price aspect was trying to go to the OTE, to a discounted area right before, into a premium area before going back down, right? So time was correct, but you guys know time and price usually always align, right? So time and price aligned over here, and that pushed down here, right? So, and what was my mistake? I was going to a lower time frame. I did this right over here, this OTE. I really never, I was like, why did the market give me 2 push to the downside, right? It gave me I I usually supposed to be getting the right, push to the downside or push to the upside. I should be getting the right setup, right? And I checked. I was like, okay, does it make sense? Is this a probability loss or did I make a mistake on this? Huh? I looked at it. I was like, bro, okay, so this is our CRT. Purge out the CRT high. There was not as high, so we're looking for this high to get purged. He got repurged by at the right time. But why are the markets to go down here? Because during that specific time, keep in mind, chat. Keep in mind, we had a SMT divergence with the fair value gap here. We had SMT with the fair value gap, with this other fair value gap. But as you guys know, OTE does not do fair value gaps. They do not do SMTs, right? It just goes to the to the OTE and eventually pushes down, right? So I was like, I was wondering like, okay, why did the market do 3 purges eventually went down, right? Because this, after the 3rd purge, was still our CRT. CRT1 got, CRT low got super on CRT high, right? Eventually, CRT low, this was still our drawn liquidity because the CRT got respected overall, right? Because see, we're saying probably got closer above, but before that closure, it gave us that number one to the downside, right? So I was wondering, I was like, oh, let me see. Why did the market do 3 drives here? Why did the market do 1 drive, 2 drive, 3 drive before pushing back down? Why did the market do 3 drive? As you guys know, 3 drives is a thing in forex, or I mean in the market, the 3 drives is a thing where I'm saying the first 2 drives are usually there's something wrong with it, right? The 3rd drive is the actual drive that's supposed to push the market, right? I'm pretty sure ITTL talks about this. I'm not sure, but I was stagnated. I was like, okay, why did the market push up then push right back down, right? And I had to check, okay, there was an OTE here. Okay, so I was like, okay, now let's go look at the London session. London session, CRT manipulation and expanded as well. So I was like, okay, now we go to the 15-minute time frame to look for that, 15-minute. Is there OT in a 15-minute time frame? Yes, there is OT here, right? So I was like, okay, there's a low. No, actually, it was a low. Shit, I forgot it. I mean, there was a high, low, higher high, lower low. So we got a stable high there as our OTE. The market made a stable low after this closure below it, right? This is a stable low that the market never pressed after it, right? Afterward, I was like, okay, this is the OT, OT golden Fibonacci zone. The market needs to do a deep retracement and accumulate new orders and go back down. It needs to scare off traders in the right side of the market. Yes, we were in the right side of the market. Yes, we were actually not in the right side of the market, right? Consider the market went back up higher, but during that specific time, we were in the right side of the market. And I was like, okay, this is what happened. I could extract a very valuable lesson out of this, right? You can see in this right here, we had an execution, 5-minute time frame. You can see there was a legit high, purge it out, get a good closure below it, entry there, stop loss here, take profit 1, take profit 2. And probably wondering, well, to first take profit, it does not offer you a 2 RR. Why did you take it right to the to the first initial take profit, which is right over here? Why did it not offer you? It did not offer you a 2 RR. Why did you take the trade? Because to me, during a specific time, my initial take profit was just 4 CT low because we were so near it, right? Okay, that's my initial take profit. That must have a 2 RR. So over here, it did have a 2 RR, and you could see 3.4 RR. Eventually, it didn't work out. Eventually, it worked out later on. 1 second. Alhamdulillah. But you can see right over here, we took it out of the. You can see right over here, the candle's kind of fat, chunky candle, right? So could have took the threshold. A lesson out of the trade is most of a lesson out of the trade. Even if the trade, even when we were wrong, supposed to not even enter this trade, there could definitely be a lesson out of this, right? Our entry should have definitely been this, this threshold, right? Why? Because our initial take profit should have been here. Our first take profit is always going to be the range that we're trading in, right? It can't be nothing else but the first range. So the first range is always going to be here. We do not care about this because this is a range we're using to execute on, right? So this range must offer the 2 RR. So from this body, right, from this full candle closure, it does not offer the 2 RR to right here, only offers as a 1 RR, right? From the threshold, it does offer the 2 RR, so it could have definitely taken out of this, threshold. It would have still been a loss, but there's a lesson on that. The lesson is basically to, our initial take profit will be always the range that we're using to currently to enter that trade out of, right? It cannot be this range. This range, we did not use this range to enter the trade out of. We use this specific range to enter the trade out of, right? So if we're using this range, we're not going to be caring about this. So from here, from this specific range, it must offer the 2RR. So the body doesn't offer the fucking what do we call it? The full range it now offers the full 2R, but the body did. But the body, the threshold, it did offer the 2RR. It would have been a loss, but a lesson of this during this specific time. I'm not gonna lie to you guys. I'm gonna be real with you guys, right? During a specific time, I had a formal problem. I somehow had a formal problem. I don't know why I had a formal problem because I did not fucking sleep, right? So I was just trying to get the day done with. I was like, yeah, fuck it, let me just see the trade. It's like a call it a day, right? And eventually, what I'm saying, as you guys know, quality matters, right? Your sleep matters, and I didn't think that much on here, right? And I eventually got a stop loss. Am I sad? Fuck no. If am I happy? Yes, because I lost, right? There's a lesson out of this, and especially if I'm gonna fuck around, I'm gonna find out, right? Fucking around and find out. Now I'm down like negative 2RR, negative 2% in my account. Will I get it funded? I definitely will. I believe so. It should be very soon. I just gotta fix these problems, right? Eventually, we're gonna get that, right? So the shorting, a lesson out of the shorting is, what I'm saying, two things: do not FOMO in. Our initial take profit will be the range that we use to enter the trade out of. The range we're using to trade out of, that's not for the 2RR. We cannot take the trade, right? And other than that that's that. And the next lesson from this trade is OTE. I always find out there's an OTE. I always find that there's always an OTE for a New York continuation. There's always there isn't a OTE for a New York Russell, but New York Russell starts a OTE, so it gives it a, what I'm saying, a startup to a OTE, right? If you guys know what I'm saying, you enter before the OTE. Eventually, you make an OTE. You make an OTE afterward after you're in the trade if it goes in your in your way. But a New York continuation usually is always the OTE here, right? I will show you guys multiple examples, but this is one of the examples. Market did a deep retracement before pushing back down, and you can see our boss was wrong, yes, but we could definitely talk about the shorting here, right? And what, chat, you gotta keep in mind, what is a New York continuation? New York continuation is a small retracement for expansion. So that retracement is an OTE, right? It's always an OTE. So if I go back in time, show you guys, the retracement is always a OTE here, right? New York session came around, OTE, push up higher, right? Right over here as well. This was a New York or Russell though, right? This was not a New York situation, but it's a New York reversal, right? We entered the trade all over here. Remember that the 13 trade we took? We entered the trade all over there. It was before the OTE. Eventually, after, I'm saying, it created an OTE, so the deep retracement eventually pushed right back down, right? And this push to the upside was just a, you can see the entry we had was before the OTE, right? Eventually, if we're correct, eventually we're gonna create an OTE. Eventually, the market is gonna retrace, eventually push right back to the downside. You can see, perfect example, OTE, market gave it a high, low, higher high. Did not make the lower low until the market closed below this low. Eventually made a lower low. Entered before the OTE. Eventually we made the OTE once we're in profits, right? After the market. You know what I'm saying? Yeah, but a OTE is created by two things. A New York continuation will always have an OTE. A New York reversal will start a OTE. You will do a startup of the OTE here, right? Let me show you guys more examples of what I mean here. Let me see if I got the example here for you guys. I'm pretty sure it should have been there. It should be right over here, right? This push up. This right over here is the OTE, right? You remember, you guys, this trade we took for for a 8RR right over here. This right over here was our OTE. So you can see right over here, market made a low, high, lower low, higher high, deep retracement before pushing back up higher. And where does OT start from? The 0.50% to 0.8886%, right? So right when it hit the 0.50%, we're fine to take the trade. And it's a trade we took for a long setup, because if you guys remember, the 5-minute entry took a long to go for the weekly CRT high, which was all over here. You see that profit out of that made us profits here for 8.5 RR. You can see the continuation always does a OT pushing back up high upside, right? Where do we find the actual OT? Where do you know where's the accurate OT happening from? Is by using that specific day. So if I'm trading New York session, the line session, you could there could be an OTE there, or there could be a start of an OTE. So if looking for a new continuation, there will high likely be an OTE, right? There will be always almost always, nothing is guaranteed, but a really high chance of there being an OTE, right? And for a New York reversal, you're basically starting an OT. You're entering before the OT happens, right? We can see right here, OT happens and just up higher, right? And this it makes a lot of sense here, right? It makes a lot of sense here. OT happened, right? You can see market made a low, high, lower, low, higher, high. It closed above, willingly. Eventually, he retraced me for a new situation. You can see 845 and pushed up higher from here, right? OT always happens, right? Although our bias on this day was wrong. I'm gonna tell you guys why our bias is wrong. The reason our bias was wrong on this day is because we can't go based out of our feelings, right? We cannot go based out of, our feelings. We have to go based on the market, right? And I went out about based on my feeling. I saw that this daily CRT was not getting respected, so I was looking for short here, right? Okay, it did not get it did not it I felt like it did not get respected, right? So I was looking for to go out against it, right? But guess what? Did it get disrespected? Did the market disrespect the daily CRT? No, we had SMT. With this low, we had another SMT and push up high from here, right? We still have the same SMT to the upside. So this trade right over here is still, this daily CRT is still valid, right? And our feelings is what got us a bear setup. Our feelings, we can't go outside our feelings because we must always trade the chart in the data, never our feelings. And for New York Russell, we did have a near time to purge, but the Monroe one was a body. Couldn't take it. But yeah, you thought would have definitely profited out of this, right? But you can see right over here, the reason we had a bear setup because we went based out of our feelings. We can never go based out of our feelings. We must always go based out of the chart, the data, right? We can never ever go based out of our feelings, right? Our feelings said it looks like it getting respect, so I'm looking for a short. But the chart says no. Right? The chart, the data says it does not look like it wants to go down, it wants to go up high. It's getting respected. As long as the market respects this, right? As long as the market respects this CRT, where I was stooping it, we still have to have a bullish bias. Why? In this case, because our feeling says we can't go to our feelings, right? Our feeling doesn't matter. What matters is the chart and the data, right? The data says it's getting respected, it wants to, go up higher, right? It does not want to go down because our feeling says, the chart says it's not going to get disrespected. He wants to go up higher from here, right? But our feeling says he wants to go lower. We can never go to our feelings. We must always go with the chart and the data, never our feelings. And that's the next, lesson. And I wrote that down. And I also wrote a New York punctuation. A OTE rule. The OTE rule is basically if I'm looking for in the situation, I must always see if there's an OTE. If there's an OTE, I cannot enter unless the market hits a 0.50% to 0.886%, right? Why? Because this is a trade I'm supposed to be getting in, right? If I took this trade, I would have been in profits. That's the trade I took in, right? So I can only take one trade per session. If I can take only one trade per session, I must trade that, right? I must enter the right setup. And this is the right setup, not this. Right? You can see why the market did two purchases here simply because of the OTE, right? So I had an OTE rule where I'm supposed to, if there's an OT there, right, for a new situation, I must always wait until the 0.50% mark to 0.79% mark, right? I cannot enter below that, right? Because people over here, this is where the dumb money, which today I was dumb money, right? This is where the dumb money sells because they're like, okay, it's gonna go lower, it's gonna go lower. Eventually, it goes up higher. Then eventually, it goes lower, right? After doing the OTE, right? So yeah, this is a very valuable lesson that we can take out of this trade. And yeah, quick recap of the whole thing is go with that chart and the data, not our feelings, right? And I wrote that down already. And for a New York continuation, there's always going to be OTE. So this market, for a New York continuation market, it does a continuation. So you first retraces before giving us the entry, they continue. The retracement is the OTE, right? And the next lesson is, take good quality sleep. Do not fucking wake up at 3 in the morning. I don't trade London session, right? So why am I waking up at 3 in the morning? I just had I had a bad routine, but guess what? It's fixed now, right? So yeah, this is my trade recap. Now I'm gonna sleep at the right time, and yeah, the lesson is that, right? Look for OTE if you look for nickel situation, and as well as, what I'm saying, do not go by your feelings. Go to the market, check the chart and the data, not my feelings, not my PNL, right? And I go back to the market. What the market wants to do, not my feelings, right? As well as the next lesson is take quality sleep, right? I can only trade New York session. I do not trade London session, so I do not know why I'm looking for a London session, right? Although our boss was wrong, there's definitely a lesson out of this, right? There's two lessons here, right? There's an OT. This is very valuable. The OT is the most valuable lesson out of this, right? This is what I like, because now this will give me a good entry, right? Now this will give me the actual perfect entry to look for a short. Yes, we always want to be perfect. There be probabilities, right? But this will give me us a damn near perfect trades, right? Because of OT is going to be a deep retracement, right? This right here is not a deep retracement. This right here is a deep retracement, because you retrace at a 0.50% mark to 0.886 mark, right? So it eventually will reverse from there. Continue eventually reverse all the way there, because our boss was wrong, because we made our feeling of, we went based out of the feeling and the emotion instead of the chart and the data. But we will from now on forward only check the chart and the data, and not go based on our feelings, right? We will, if we're looking for nickel situation, there's an OT. We can only execute after the OT is tapped, meaning 0.50% mark to 0.886 mark, right? Otherwise, I cannot take the trade. If it's below the 0.50% mark, I cannot take any trade. I must wait until the OT holding Fibonacci zone gets tapped. Then I can look for a trade, right? It is a lesson. Tomorrow, probably going to be a bullish bias. The day CT is getting respected. I'm going to trade the chart and the data, not my PNL. But yeah, thanks for watching. I'll see you guys later. Peace out.